When you're out looking at properties, what are there like 3 main things that you're looking for when you're trying to find something that's going to be profitable enough for you to actually take on? What is it you're looking for?
Basically the ugliest house in the nicest neighborhood.
Yeah.
Ultimately, I want to find a house that's 70 to 80% below market value, minus repairs.
Wow.
And that's where I can make my 10% profit on any flip.
Yeah.
So ultimately, doing your right underwriting process is super important to make sure that flipping is profitable for you.
Yep. Okay. To that point, is there a chart or like a spreadsheet that you're following when you're putting this out? So you're looking at a property and saying, doing the backwards math on what you can buy this property at to be able to make a profit. Is there a full spreadsheet that you follow to be able to do that?
Yeah, I do have a pro forma that breaks down escrow, title, holding costs with my lender, hard money costs, what my gap funds costs will be in terms of if I have a private money lender invest in the deal, commissions, the closings on the backside. So yeah, I have all my costs figured out in a pro forma.
Explain what gap funds cost means. What's that?
So gap funds. So traditionally, when an investor is purchasing a property, so I go buy a house to invest in. Typically, a hard money lender is going to require someone to put somewhere between 10 and 20% down as a down payment.
Yep.
So gap funds would be the down payment.
Got it.
So what you can do with hard money is you can raise that second and then have that second recorded against title. So for me, let's say I'm buying a $900,000 house. I'm required to put $150,000 down.
Yep.
I have a second investor raise that $150K, and they're recorded against the property, and then I'm paying them a fixed annual interest on that money.
Wow. So you get a hard money loan on the first and do a gap money second, essentially. And then, so you're putting literally zero money into your flips is how you're doing it most of the time.
Now I am. I didn't do that before. So it depends. If you're first starting out, I would suggest to do it yourself because you should lose your own money before you're losing someone else's money.
Yep.
I do when it comes to the rehab, because hard money lenders allow you to have a rehab holdback, which means that they will fund your construction costs.
Yep.
What a lot of beginning investors don't know is that they're not actually funding it up front, they're funding it in the back. So I'm still paying for those costs up front, and then I'm getting reimbursed as the project continues to be finished. So for example, let's say I get, it's a $100,000 budget. Let's say the hard money lender only allows me to have 2 draws.
Yeah.
So I'm doing $50K in the beginning that's upfront out of my own pocket.
Right.
Once that work is done and they confirm condition, they'll reimburse me for that $50K.
Got it.
Then the second one, when it's done and completed and on the market, most likely they're going to reimburse me for that additional $50K.
Yeah.
Some hard money lenders will allow you to do more than 2 draws, but they'll charge you per draw.
Wow. Okay, so even with hard money deals, it seems like, or it sounds like, they're going to give you the money to actually do the renovations, but the reality is that they're just reimbursing you for what you paid out.
Correct.
Got it.
Yeah, when you're a beginning investor, theoretically, I would say you should have about 30% of whatever the after repair value is.
Okay. In your experience, if you're a first-time flipper, are you seeing any hard money lenders out there that'll actually finance a first-time flipper, or are they looking for people who have a track record of flipping homes on their own first before they'll even entertain doing any type of flipper financing?
So local hard money lenders typically will allow for first-time investors. The requirement will be a bigger down payment.
Yeah.
So that would be the only difference. Like now where I'm at today, I can put 10% down or less in some cases.
Yeah.
And my interest is far better than what you would pay as a typical brand new investor.
Yeah, so brand new investor, like what type of down payment?
So brand new investor, most likely it's going to be a 20% down payment, and then your interest is going to be much higher.
Got it.
So let's say 12 to 15%. We're in San Diego. Other areas are different.
When you're looking at a property and you're just standing outside or walking through for the first time, how are you coming up with what you think that's going to cost you? Is it just that spreadsheet, or are you doing like back of the napkin math? What are you doing?
I mean, now it comes from experience, but a lot of times I'll use price per square foot. So anywhere from $60 to $120 per square foot, depending on how big of a remodel. It's a lower end cosmetic, probably on the lower spectrum of that.
Yeah.
If it's a higher end, probably on the higher spectrum of that. It can get over that if it's a full gut, you're opening walls, things like that. But I do use, my simple table math. Like if we're looking at a 1,500 square foot house in San Diego, I'm probably budgeting $100,000.
Wow.
If not more than that.
Yeah. Most of the flips that you're doing right now, are they full guts, or is it, hey, we're just gonna splash some paint on there and we're gonna redo some flooring really quick, paint the kitchen cabinets and be done? Or are you looking for more, what's this full flip project?
When you're finding deeply discounted properties, traditionally you're doing a full rehab.
Got it.
The traditional cosmetic one, most likely the agent's going to list it on the open market and get a traditional buyer to purchase it. The ones that I'm buying are typically only properties that can only qualify for cash.
Got it.
Right? That won't qualify for traditional financing. So, and that's ultimately where I'm able to make my margin is when they're deeply discounted because of the work needed and the headache that we'd have to take on for it.
Exactly. When you're flipping properties, are there any legal issues that you're watching out for right away? Things you want to avoid?
Yeah, I personally know. On the back end of a flip, you ultimately just want to disclose.
Yeah.
Right? I've actually seen a lot of people just not disclose to me or to other investors. For example, I have some very close friends who invest in real estate and flip property, and the seller didn't disclose murders that have happened in the house and things like that, where obviously you know that you have to disclose if someone's passed away in the property for a specific period of time. So I've seen sellers not understanding that properly, and then maybe even agents not even disclosing certain things like that when we're buying properties on the front end. But typically once we get it, we're just disclosing ultimately what we've done to the property.
Right.
Now there's some rules that may be coming out in regards to disclosure of like full bids, so that buyers can understand the scope of work that's happening to each of those properties.
Right.
So that they have a copy of that and the GC's information just in case if there's faulty things.
Got it. Is that pretty commonplace then? They have to actually supply, when you're selling the property, you got to do like the GC's bid, all of that too?
You don't. It's a rule that's potentially coming out, and I'm hearing it potentially coming through the grapevine.
Right.
I don't know if that's going to happen or not. To me, I don't see it happening, but yeah.
Cool.
Some people like material lists, but full scope of work doesn't make a whole lot of sense with prices and things like that. Yeah.
When you're doing flips, are you managing all the crews yourself, or are you doing using a contractor, multiple contractors? How are you handling the majority of your flips?
It depends on the specific deal and how many I'm doing. If I'm doing multiple big rehabs, most likely I'll be using one GC per property. There are GCs that can have multiple crews that can manage multiple projects at once. What I've found, and I've gotten in trouble with this, is that I'll get time delays if I do that. So I try to focus on having separate crews for separate projects at once.
So each property itself having its own crew. That way they're not going back and forth.
And one of the tips that I have for people who are trying to do this for their first time and not having to go to the property or feel like they have to go to the property all the time, is there's an app called Company Cam. So anyone that I work with, like GCs or workers at the property, what they'll do is they'll do picture updates, and it automatically updates on my phone, so I can see what work has been done that day. I get updated photos. What's great about that is when you go to try to get your rehab costs reimbursed to you, you can send those photos because they're already in your app directly to your hard money lender, so that they know the work is being done as well.
Wow.
Yeah.
Okay.
So it saves you a bunch of time. I see a lot of investors who go and drive their projects or are at their projects or micromanage their contractors all the time. I'll tell you, over the last few months, and I was that person at some point. Over the last few months, I've purposely avoided doing that, and it's actually, the project have finished faster, and the work has been done more efficiently without me being there.
Wow.
Yeah. So I had one recently. I think I stepped foot in the project once while the whole rehab was going on.
Wow. So many people right now are just saying that, hey, rates are too high, home prices are too high, flipping homes right now, just not a good time. What are your thoughts on that?
I mean, the proof is in the pudding. I could see a lot of people thinking that flips aren't profitable. I think a lot of people have gotten in trouble over the last few years with interest rates and things fluctuating really fast. When you're buying deals on the front end and they don't make sense on the front end already, and you're guessing that the market is going up, it's not going to be profitable for you. If you're conservative with your numbers in a market like this, we have elections, we have high interest rates. As long as you're conservative on your purchasing of the property, you should be okay. I've never to this date lost any money on any flips, and ultimately it comes down to just buying the properties right on the front side.
Let's talk about tax implications. When you're flipping properties, and you get more than one per year. Any major tax implications you got to watch out for? Capital gains, that kind of thing. What is it you're looking for when it comes to taxes?
So I have a rule. Flipping is not investing. It's active income.
Yeah.
So you're taxed just as ordinary income. So my goal with flipping is ultimately just to buy more long-term investment properties.
Yep.
So if I can flip 4 single-family houses and then buy a rental as the 5th deal, buy a rental.
Yeah.
And then I can use the cost segregation to wipe away those 4 deals worth of income.
Yep.
So it's a strategy. Definitely have the right tax person in place. But flipping is a job. It is active income. It's not passive.
Right.
It's very active. It's a full-time career.
Right. Yeah. And are you doing an LLC for each property that you buy, or is it all your properties are purchased under one LLC?
One LLC, and that's what a hard money lender will require you to do. You can have multiple. I just don't suggest it.
Yeah.
Ultimately, talk to your tax person on how they want you to set it up. But I have one LLC that runs through all my flips because it's all my expenses and all my accountant checks everything on one account.
Right. It'd become a nightmare if you're running that many properties and that many LLCs.
Yes.
Got it.
Yeah.
Okay.
Rentals, I would suggest different LLC though.
Yeah.
Yeah, and I'm sure your tax person will too.
Yep, for sure. When you're flipping a property, and obviously you're doing the numbers as best you can, how much do you think you should set aside for unexpected expenses?
I would say a 15% variance.
15%?
Yeah.
Wow. 50% of the purchase price, 50% of the total cost?
Of your budget.
Of your budget.
Of your budget. So if we're talking specifically about rehab costs, if you got quoted by your contractor and it's going to cost you $100K, I would say that it's probably going to cost you closer to $115.
Yeah.
There's things that happen towards the end where you're like, oh, maybe we should add this. It's going to spruce it up. Maybe we'll push value a little bit.
Yep.
So I tend to always overspend a little bit. It's very rare that I'm on budget or under budget.
Right.
Most of the time I'm a bit over. So I try to keep a 15% variance of what my rehab costs are.
Yeah.
And then in terms of resale, I recently, it's kind of hard with our market because we've gone through 20 offers on one house to maybe 5 offers on one house.
Yeah.
So the way that I gauge any specific neighborhood that I look at is, one, how much active inventory is in this specific neighborhood. If there's a ton of actives, there's something going on.
Yep.
If the second thing would be pendings, calling all pending sales, calling the realtors who have the pending sales.
Yeah.
Figure out what's going on, how long it took for those people to get under contract, are they over asking price, what the story behind that was and why. And then I don't go 6 months back anymore, I go 90 days because I want to know a short period of time of what's transpired, so I can make a good gauge on what my resale value is. And rule of thumb is I never say that my house will sell over any comps in the neighborhood. If the highest sold property was 889, I'm not pushing 889. So yeah.
Trying to set records on your flips, probably not going to happen.
No, I mean it can.
It could.
It has, and it will. But I don't bet that on my numbers up front because I want to be able to buy the property right. And if anything does happen, or shifts with the economy, or rates do jump up, or we have some weird thing that happens with the Fed, I want to be prepared for that and have my margin enough to where I'm going to walk away clean.
Yeah. How quickly are you getting in and out on average?
Yeah, so my typical remodels are anywhere from 6 to 8 weeks. So I would
6 to 8 weeks.
Yeah.
Wow.
Yeah.
Okay.
And that's pretty much full remodel. New kitchen, roof, bathroom, flooring, exterior landscaping, all that stuff.
Wow.
Full remodel, 6 to 8 weeks. So from start to finish, I would say 90 to 120 days max from closing on the house to closing on the house again and getting paid. And I've had some that have been less. We just closed on one that was less than, it was 56 days.
Wow.
Yeah.
That's flying.
It's flying.
When you're flipping homes, looking around, what are the main areas that you're focusing on where you know you're going to get the most bang for your buck? Or maybe you don't use the cheapest type of material for that, but you maybe go a little higher end. Certain areas, what are those?
So kitchen and master bathrooms are my 2 most favorite. And then if there's a decent backyard or something where we can add something kind of fun in the backyard, that too. But I always like to have a little bit of fun in the kitchen for sure.
Yeah.
And then the master bathroom for sure.
Yeah, those are the 2 main focus. For spending a little bit more.
Yeah.
Buying a house, curb appeal isn't that great. Are you putting enough money into the landscaping to where you're doing irrigation, that kind of thing? Or are you just putting sod down in the front and the back, getting in and out, make it look pretty at the sale, and then moving on?
It depends. A lot of the houses recently that I've found actually do have irrigation. They're just not properly working.
Right.
So we'll fix the irrigation and then lay sod down. I know a lot of people back in the day when I was kind of in this like growing up in 2012, 13, 14, it would be just laying down sod with no irrigation
Right.
and just spraying it out a couple of days and putting it on the market.
Yeah.
So nowadays it really just depends on the property and what kind of budget we have.
Yeah.
But ultimately I do like to have the irrigation because the grass is going to die really fast.
Yep. What do you see for flipping in the future? Think it's going to stay a robust, way to make money, or is it something you are maybe thinking it's going to be coming to an end?
Flipping's been around for decades.
Yep.
It's been around for a really, really long time.
Yeah.
I don't think that flipping houses will go away. I do think that actually wholesaling will go away. I think assignments in California, I think that's coming down the pipe where they're going to get rid of assignments. And for those people that don't know, wholesaling is where I sell the contract to another investor, or an investor sells me the contract to someone else for a profit. And I think those types of things are going to become illegal in a lot of states coming forward. I know
Wow.
South Carolina, and I know California is definitely in talks for that happening as well.
Wow.